What's up, bosses, and welcome back to Boss Economic World. It's Friday, October 17th, 2025. For the past year, the global economic narrative has been, let's be honest, a bit of a downer. You've got central bankers walking on eggshells, Wall Street analysts chewing their fingernails down to the nub, and of course, the never-ending drama of President Trump's America First, Tariffs for All world tour. The story we were all sold was simple: Trump slaps tariffs on everyone, global trade grinds to a halt, and emerging markets, especially the export-heavy ones in Southeast Asia, get hit the hardest. It's supposed to be economic winter. Then, this morning, a little country with a lot of ambition decided to flip the script entirely. Malaysia just dropped its third-quarter GDP numbers, and to say they were good would be the understatement of the year. The entire market was expecting a slowdown, a wobble, maybe a slight cough. Instead, Malaysia strapped on a rocket pack, lit the fuse, and blasted off. So, the billion-ringgit question is this: in a world supposedly being strangled by trade wars, how on earth did Malaysia just pull off an economic magic trick? Did they find a cheat code? Is it all a mirage? Well, you've come to the right place. Forget the confusing headlines and the dry analyst reports. Today, we're going to peel back the layers of this economic onion, restore the full picture, and figure out the truth behind Malaysia's miracle quarter. Let's get into it. Alright, let's start with the numbers that made my coffee taste a little bit sweeter this morning. Malaysia's Department of Statistics released its advance estimates, and get this: gross domestic product, the big daddy of economic report cards, grew by 5.2% year over year in the third quarter. Now, to the average person, 5.2% might sound nice. But to us bosses who watch this stuff, that number is an absolute monster. Bloomberg surveyed a whole roomful of economists, the folks with fancy degrees and even fancier spreadsheets. The most optimistic, pie-in-the-sky forecast among them was lower than this. Malaysia didn't just beat expectations, it lapped them. Twice. This isn't just a one-off, either. This is faster than the previous 3 quarters. The official statement from Chief Statistician Mohammed Yusur Mahidin was the classic, modest government speak: domestic demand continued to be the primary engine of growth, citing tourism, holidays, cash handouts, and an interest rate cut. Okay, fair enough. But here's the kicker, the part that has everyone scratching their heads. He also said sustained capital investment and rising external demand bolstered the expansion, despite uncertain trade policies. Rising external demand? In the middle of Trump's global tariff palooza? The US slapped a 19% levy on their goods. That's not a tariff, that's a bouncer at the club door telling you the cover charge is your life savings. Exports were supposed to fall off a cliff. Instead, they grew 12.2% in September. Exports to the US, the very country imposing the tariffs, jumped a jaw-dropping 24.4%. Something doesn't add up. The official story is like saying you won a swimming race because you wore lead boots. It defies logic. So, to understand what's really going on, we have to look beyond the press release and analyze the 3 secret ingredients in Malaysia's growth cocktail. The biggest paradox here is the Trump trade war. It was designed to punish countries like China and, by extension, its neighbors. But for some, it's become the gift that keeps on giving. This is what I call the Trump bump, and it works in 2 ways. First, there's front-loading. Imagine a massive hurricane is coming next week, and the price of bottled water is about to go through the roof. What do? You go to Costco today and buy a pallet of it. American companies did the exact same thing. Knowing the 19% tariff hammer was coming in August, they went on a shopping spree in July. They ordered everything they could from their Malaysian suppliers to get it into the US before the levies hit. That 24.4% jump in September exports to the US isn't just normal business, it's a massive, panic-driven stockpiling effort. It's a sugar rush. It pulled future demand into the present. But that's the short-term story. The real game-changer, the one that will define the next decade, is trade diversion. For 20 years, the global manufacturing motto was "make it in China." It was cheap, it was efficient, it was easy. Then the US-China trade war happened, and suddenly, having all your eggs in the China basket looked less like a smart strategy and more like a corporate death wish. So what did global companies do? They started what I call the Great Supply Chain Shuffle. They began moving production, assembly, and sourcing out of China and into neighboring Southeast Asian countries. It's the China plus one strategy on steroids. And Malaysia is perfectly positioned to catch this wave. It's not the cheapest, but it has a skilled workforce, decent infrastructure, and a government that's rolling out the red carpet for foreign investment. They specialize in high-value goods, particularly the electrical and electronic products mentioned in the report. We're talking about semiconductors, integrated circuits, and components for everything from your iPhone to your car. These aren't t-shirts or plastic toys. These are critical components. A company like Apple or Dell can't just find a new semiconductor supplier on Amazon. So, when their Chinese supply chain gets hit with a 30% tariff, they look to their Malaysian facility and say, full steam ahead. This isn't just a Malaysian story. Look at the neighborhood. Vietnam's economy grew at a blistering 8.23%, the fastest since 2022, for the exact same reason. It's become the new hub for assembling everything from Nike shoes to Samsung phones. Even Singapore, the region's buttoned-up financial hub, grew at 2.9%, beating expectations, because it's the corporate headquarters and logistics brain for this entire shuffle. So, ironically, Trump's attempt to decouple from China has accelerated the rise of Southeast Asia as the world's new workshop. Malaysia isn't just surviving the trade war, it's thriving because of it. Now, you can't build a 5.2% growth rate on exports alone, especially when there's so much global uncertainty. That's like trying to fly a kite in a hurricane. You need a strong anchor. And Malaysia's anchor is its domestic economy. The government and the central bank executed a classic, two-pronged stimulus plan. First, let's talk about the central bank, Bank Negara Malaysia. Back in July, they saw the storm clouds of the trade war gathering and did something preemptive. They cut their key interest rate by a quarter point. For the average person, this just means borrowing money got cheaper. Thinking of buying a new Proton? Your car loan is cheaper. A small business owner looking to expand? Your loan is cheaper. This encourages people and businesses to spend and invest now rather than later. It's like the economy's gas pedal. The central bank also released more funds into the banking system, which is a fancy way of saying they made sure the banks had plenty of cash to actually lend out. Second, the government stepped in with some good old-fashioned cash. The report mentions cash disbursements and a one-off cash assistance of 100 ringgit. Now, 100 ringgit is about $21. For the finance pros in my audience, you might scoff at that. It's not going to buy you a new yacht. But you're missing the point. This money isn't for the rich, it's for lower and middle income families. And what do those families do when they get an extra 100 ringgit? They don't call their wealth manager. They go out and spend it. Immediately. On groceries, on a meal out, on school supplies. In economist speak, they have a high marginal propensity to consume. It's one of the most effective ways to inject life directly into the consumer economy. So you have this perfect storm, the government gives people a little extra pocket money right as the central bank makes it cheaper to borrow, all happening during a quarter full of public and school holidays. The result? As the chief statistician said, tourism-related activities boomed. Malaysians decided to explore their own country, spend money at home, and keep the domestic engine roaring. So we have the external boost from the trade shuffle and the internal boost from the stimulus. But where did this growth actually happen? When you look at the breakdown by sector, you see it wasn't just one part of the economy doing the heavy lifting, it was a full-on symphony. Let's start with the rockstar of the quarter, mining and quarrying. This sector jumped an absolutely staggering 10.9%. To put that in perspective, in the previous quarter, it shrank by 5.2%. That's a 16-point swing. It's like a prizefighter getting knocked down in one round and coming back to score a knockout in the next. This was driven by a huge increase in natural gas and crude oil production. Malaysia is a major energy exporter, and with global demand holding up better than expected, they simply opened the taps. Then you have manufacturing, up 4%. This is the heart of our great supply chain shuffle story. The report specifically calls out electrical, electronic, and optical products. That's your high-tech trade diversion right there. It also mentions vegetable and animal oils, which reminds us that Malaysia is a commodities powerhouse, being one of the world's top palm oil producers. Construction continued to boom, expanding 11.2%. This is a huge sign of confidence. You don't build new factories, new condos, and new highways if you think the economy is about to tank. This is the physical manifestation of that sustained capital investment the report talked about. Companies are literally building the infrastructure for future growth. And finally, the bedrock of any modern economy, the services sector. It grew at a solid 5.1%. This is your restaurants, your hotels, your banks, your retailers. This number tells you that the domestic feel-good formula is working. When people have jobs and a little extra cash, the services sector thrives. When you put it all together, you see a picture of an economy firing on all cylinders. High-tech exports, commodity exports, domestic spending, and future-focused investment all humming along in beautiful harmony. Okay, so far it's all been champagne and fireworks. Malaysia is the hero of the global economy. But here at Boss Economic World, we don't do blind optimism. We are realists. And every boss knows that after a great party comes the morning after. So, is this sustainable? Let's be real. That 24.4% export jump to the US has one-off written all over it. The front-loading effect is, by definition, temporary. Those American companies have now filled their warehouses. We could see a significant drop-off in Q4 and into 2026 as that demand normalizes. The domestic stimulus also has a shelf life. You can only cut interest rates so many times before you hit zero, and governments can't hand out free cash forever without worrying about debt and inflation. That 100 ringgit boost is gone. The biggest risk, of course, remains the global picture. If Trump doubles down, or if the US economy, propped up by its own stimulus, finally tips into a real recession, no one is immune. A major global downturn will eventually hit Malaysia's exports, no matter how much they've diversified away from China. Even the Malaysian government knows this. Their own official forecast for 2026 sees growth moderating to a still healthy, but less spectacular, 4% to 4.5%. They're acknowledging that this 5.2% quarter was exceptional, not the new normal. The central bank's warning that the balance of risks to the growth outlook remains tilted to the downside wasn't just boilerplate. It was a genuine signal of caution. So, to bring it all home, what's the full picture of Malaysia's miracle quarter? It wasn't a miracle, and it wasn't a mirage. It was a masterful performance, a complex cocktail of shrewd positioning, timely stimulus, and a little bit of luck. They were in the right place at the right time to capitalize on the great supply chain shuffle, turning Trump's trade war from a threat into a massive opportunity. They simultaneously hit the domestic gas pedal with cheaper money and cash handouts to ensure the home front was secure. And it all came together in a perfect storm of stockpiling, holiday spending, and booming commodity demand. The story of Malaysia in Q3 2025 is a crucial lesson for every investor, policymaker, and boss watching today. It teaches us that in this new era of economic competition, the winners won't be the ones who hide. They'll be the ones who are agile, diversified, and smart enough to play the chaos to their advantage. Malaysia saw the global chessboard being reset and made a grandmaster's move. The challenge now is to prove it wasn't just a brilliant opening, but that they have a winning endgame strategy as well. We'll be watching the figures for the Philippines, Thailand, and Indonesia next month to see if they can follow suit. That's the real story behind the numbers. Stay sharp, stay informed, and remember that in the world of economics, the headline is just the beginning of the story. I'm the boss. I'll see you next time.